Welcome to ForexTV.com. Today's Tuesday, July 15th. I'm Remy Hookie for New York Forex Market Buzz. In afternoon trade, the U.S. dollar has pared back earlier losses, but is still weaker across the board. Earlier today, the U.S. dollar hit an all-time low against the euro and sold off against the pound, Aussie, and the yen. Now, taking a quick look at the headlines from the CP News Desk, it was a very busy morning for economic data, with the release of weaker-than-expected retail sales, rising producer prices, and testimony from Fed Reserve Chairman Ben Bernanke. Also this morning, the Bank of Canada held rates steady at 3%. And appearing before the Senate Banking Committee at the semi-annual Humphrey-Hawkins testimony, Fed Chairman Bernanke said he sees significant downside risks to the growth outlook. Bernanke added that judging the balance of risks is challenging and that he sees a limited pass-through of oil to consumer prices. And speaking in the Q&A portion of his testimony, Bernanke said that banks are being challenged by the current credit conditions and that he believes investment banks require supervision. Also speaking at the Humphrey-Hawkins testimony, Treasury Secretary Henry Paulson said that GSEs need a strong regulator. Also this morning, U.S. President George W. Bush thanked members of Congress for their positive response to the housing bill. Bush urged them to enact the plan into law as he feels more needs to be done before the August recess. And in U.S. data releases, retail sales ex-autos rose 1% in June, and total retail sales gained 0.4%. The total retail sales figure for May was revised down to 0.8% from the previously reported 1% gain. Also, the U.S. Labor Department's seasonally adjusted core measure of producer price inflation grew at 0.2% month-over-month in June. The headline measure moved up by 1.8%, and from a year ago, the core measure of PPI was up 3%. Now, the annual headline rate came in at 9.2%, and that's up from the previous month's annual gain of 7.2%. Now, we move on to our interview with Greg Salvaggio from Tempus Consulting in Washington, D.C. Good afternoon, Greg.
Good afternoon.
Thank you very much for joining me today.
Thank you for having me.
Well, it's been a very volatile day in FX given the major price action that we woke up to here in the North American session, and euro dollar hit record highs while Aussie dollar topped the 98 level. And while some of today's advances against the dollar had been expected, it's been quite a rapid ascent. So I do want to get to the individual pairs and crosses, but first give us your take on this morning's action and what you're paying attention to.
Well, really what we're all watching is a testimony from both Ben Bernanke, Secretary Paulson, and head of the SEC here, Mr. Cox, as well. Really what their job is to assure markets that they will not allow a complete collapse and deterioration of the U.S. financial system. And thus far they seem to be doing quite a good job of that, reassuring people that the banking system remains sound, that Fannie and Freddie will have access to capital, that they want to keep the current structure of Fannie and Freddie intact, have all really provided a bit of stability to the market and have really prevented the euro from continuing its drive higher. Whether this continues to play out through the day remains to be seen. However, it seems to have stabilized equity markets and the dollar for the moment.
Okay, Greg, let's take a closer look at the euro. After earlier breaching record highs, euro dollar has pulled back to trade around the 1 and 98.20 level. But the U.S. currency was hammered this morning. So in the next 24 hours, Greg, what's your technical forecast for euro dollar?
Well, I think we could basically throw the technicals out the window right now. Really, what we're trading on is sentiment. If Fed and Treasury are able to restore confidence in the U.S. financial system and the credit markets, we will begin to see the dollar drive higher. However, should they fail to do that, we'll likely see the dollar set new all-time lows on the euro. At the moment, traders seem to be reflecting some renewed confidence in what they're saying, quickly backing this off from the 160.40 level we saw overnight, and then quickly those levels at 160.20 we saw initially after Bernanke's comments this morning. Further question and answers seem to be doing the job of stabilizing equities and restoring some minimal confidence back in the market. So overall right now, obviously 60-40, 60-50 critical levels on the upside. However, we believe that the dollar should begin to post gains moving forward.
Okay, Greg. Well, while we're still on the euro, let's also take a look at cable. The UK currency advanced above the 2 handle against the US dollar, touching highs of 2 and 0.156. Now, while the UK economy also faces inflation pressures as well as deteriorating economic fundamentals, the pair continues to gain more on dollar weakness. But euro sterling is lower after gaining above the 80 level yesterday. So, Greg, if you could give us your take on the UK currency.
Well, right now we're seeing sterling clearly benefiting from its position as a safe haven currency. Investors were looking this morning to shift out of dollars really across the gamut of currencies. The UK, having obviously a higher interest rate environment, attracted quite a significant amount of capital early on today. However, if we take a step back and look at the UK economy and economic possibilities moving forward within the UK, we think the outlook remains rather bleak. What we're seeing happen in the UK is economic growth is continuing to slow, led lower particularly by the housing sector and a declining consumer. So with those two factors in, we now have inflation levels rising in the UK. We believe it unlikely that the Bank of England will hike rates within the next several months. So we think that as the U.S. economy pulls itself out of its current doldrums, we're going to find the Bank of England in quite a quagmire, which is really going to prevent them from taking any policy step, whether cutting rates to stimulate growth or hiking rates to curb inflation. And we think the result of that will be a declining pound. So we think levels here above 2 are probably a good place to enter in short sterling.
Okay, Greg, you mentioned inflation, so let's shift our focus over to the commodity currencies. Today we saw NYMEX crude oil prices pull back sharply, and talking about excessive moves, crude earlier tumbled over $10 a barrel. But first, let's take a look at the Aussie against the US dollar. Now, some FX strategists and analysts that I've spoken to had forecast parity for the pair by the end of this year, and so far the strategy has been to buy on dips for the Aussie dollar. But what is your outlook going forward for Aussie against the U.S. currency as well as the yen?
Well, I think we have to be careful with all of the global commodity-linked currencies, and the reason for that is if you are of the mindset, which we are, that the global economy is approaching recessionary stature, much like the U.S. has right now. And if we look at a lag in really the emerging BRIC economies, we are expecting significant declines in their demand for commodities. Having said that, we are expecting the commodity-linked currencies to fall in tandem with expected economic slowdown in China and in India in particular. We're also looking for a significant backing down in crude, which we believe will also contribute to declines in these currencies. And on an offset currency, we're also looking at the correlation between gold and, in particular, the Aussie and the Canada. With the price of gold really up at these levels as a hedge against this systemic risk that the market is fearing is surfacing within the U.S. economy, we believe that as Fed and Treasury soothes market fears, we will see the price of gold back off, and in turn, that will pull the Aussie, Kiwi, South African Rand, and to a lesser extent the Canadian dollar all lower.
Okay, Greg, last but not least, before we wrap it up for today's interview, amidst all the volatility in FX, today there hasn't been that much focus on the BOC rate decision. Earlier this morning, the BOC left rates steady at 3% as expected, and the Bank of Canada noted that economic growth in Q1 of this year was weaker than expected. And we also saw that the statement said the central bank will continue to monitor the Canadian as well as global economies. Now, given that you mentioned the BRIC economies as well, are there any other currencies also, not just only the majors, but also the EM currencies that you're watching?
Well, we stick primarily to the major currencies. We think there is too much uncertainty in the global environment right now to really shift out of the majors. As we said, we're expecting a global slowdown to happen really Q3, Q4 of this year, basically lagging the business cycle of the U.S. So having said that, we think your best bet right now will be to be long the dollar, primarily against the pound and against the euro at these levels, obviously with tight stop losses on the sterling levels above 203, on the euros levels above 161. But we think from a longer-term trading perspective, this is a good time to start buying the dollar.
Okay, Greg, thank you very much for joining me this afternoon, and thank you very much for your insight and analysis.
Thank you. Take care.
This has been your Forex Market Buzz with Greg Salvaggio from Tempus Consulting. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.